Hey traders and investors, it's Serge Berger here. Today we're going to have a look at eBay. eBay has historically been a very good stock for active traders and investors, as long as you understand what type of personality the stock is displaying at any given point in time. At the moment, we have, if we just look back a little bit, we have a stock that you can see basically works higher in very nicely defined waves. For one, of course, this long sideways patch here before going on the big rally here of 2013, and then again the next consolidation phase, which essentially ended roughly 1 month ago, a little bit more than 1 month ago, when the stock actually burst out of this fairly long time consolidation phase on the back of some news that Carl Icahn was coming in and fighting the board and trying to put his people on the board of eBay and things like that, and doing all sorts of accusations, typical Icahn style kind of stuff. So that's cool. The only thing is, when you have a breakout like that, and we can go back and look at other breakouts in the past, they tend to try to get retested. Okay, so if we zoom in a little bit closer again here, note that basically so far what we're doing, even though this breakout has essentially completely retraced over the past few weeks, it's a necessary retest that if it doesn't break the chart, makes it stronger, if that makes sense. So through that lens, we're now basically arrived at a very critical point. At the time of this recording, the stock is somewhere around the $55 mark, and that is basically is a result of the stock bouncing off of its 100-day moving average. The 100-day moving average here is this blue line, if you can see that, and that so far has been an intraday retest. So we have a stock that is staging a beautiful breakout on the back of an activist investor coming in, which matches the technical, so very positive both on the news front and on the technical front, and right now is actually retesting the breakout area that it should have. What we need to see now, in order to go long the stock with a little bit more conviction, is a follow-through buying day. If this selling day here on the 27th of March, which is today when I'm recording this, is actually holding a hammer. You can see here I wrote hammer time, which is a reference to MC Hammer's song Can't Touch This. But basically, if this hammer that you see here holds, it means that bears have basically caved, bulls have taken over, but we need to see a follow-through buying day. Okay, and a follow-through buying day will need to be fairly aggressive. So we need to see the stocks get above, let's say $56. At that point, you have a stock that has successfully retested the breakout point, come down, give us a hammer candle and a break and a follow-through buying day. The follow-through buying day doesn't have to happen right away in the next couple days, but it should happen at some point over the next week and a half or so. If that comes to pass, we have a high probability trade to the long side on eBay that you get the stock at least back to the early March highs, somewhere in the very high 50s. I hope this makes sense. As always, if you got any questions, you can hit me up on Twitter at my handle, which is SteadyTrader. Take care.